Hello, my name is Gina Buchholz, and I'm one of the advisors at 401k Plan Professionals. In this brief presentation, I'm going to explain the new Roth Catch-Up Requirement. This is a piece of legislation that will become effective in 2026, and it will specifically impact individuals who are age 50 and older who want to take advantage of the 401k catch-up contributions and who are deemed to be high income earners. Please know that our team at 401k Plan Professionals, we're here to help you. Please reach out after this presentation if you have any questions at all. I'll make sure at the close of the presentation you have all of our contact information, our email addresses, phone number, and an opportunity to schedule a one-on-one meeting as well. So let's talk about the why. The legislation was part of the Secure 2.0 Act, which was signed into law back in December of 2022. This piece of legislation was originally supposed to be effective in 2024, but it was delayed and it's now effective in 2026. The Secure 2.0 Act had a number of provisions to help improve retirement readiness for all Americans. As part of that act, it did include a number of tax credits to small businesses to encourage them to offer retirement savings plans, and also tax credits to lower income earners to help them take advantage of these retirement savings plans. To offset the tax credits, the legislation had to have a revenue driver, and that's where the Roth Catch-Up Requirement comes into play. As many of you know, a Roth after-tax contribution raises revenue today versus a pre-tax contribution, which is tax deferred. So that's a little bit of the history and the why. So let's talk about how and who it's going to impact. Again, starting in 2026, this will impact any 401k saver who's age 50 and older and who has earned $150,000 or more in FICA wages in the previous year. So that would be in 2025. Those individuals must contribute any and all of the IRS catch-up amount as a Roth after-tax contribution. So a couple notes about the income. So if you're not sure, you can find your FICA wages on your W-2 box 3. So look at your 2025 Form W-2 Box 3. Again, if you made over $150,000 in those FICA wages and you're 50 or older, this legislation would apply to you. Keep in mind that those wages will likely be indexed annually, and there will always be a look-back year. Let's also clarify the IRS limits for 2026. So the limit to contribute to a 401k is $24,500. The catch-up limit is $8,000 for those age 50 and older. So if I'm over 50 and I want to contribute the catch-up, my total contribution that I can contribute to my 401k in 2026 is $32,500. $8,000 of that or more must be contributed as Roth after tax. The same thing holds true for the super catch-up. The limit there is $11,250. That applies to those ages 60 to 63. So if that's your catch-up, that limit must also be contributed as Roth after-tax contribution. So what else do you need to know? Please know that we've been working diligently with 401k vendors, payroll providers, and your HR team to help ensure compliance with this new regulation. We also want to make sure that you understand and monitor your 401k contributions for compliance too. I might encourage you to also talk to a financial or tax advisor about how the new 401k Roth catch-up requirement might impact your retirement savings strategy. And of course, reach out to our team at 401k Plan Professionals if you have any questions at all. Here is our contact information. Our email is our first name at 401kplanprofessionals.com. Any one of us on the team be happy to help you. There's our phone number, our website, and if you'd like to schedule a virtual meeting with us, please use the QR code on the screen. That's an easy and effective way to connect with one of the advisors. If you have any questions, we look forward to hearing from you, and we certainly appreciate your time.